All right, it is the first trading day of October, and we still got a downward trend here in the short term. Bulls start to take over here, hit this 4,300, and then these had this hard pullback. We rejected this 4,300 twice here last week in the to close out the week, close out the quarter, and it's not a good sign that we rejected it here again. If everything we look at shows that we're in a downtrend, except that shows we're in a downtrend, except when we zoom out to the max. So taking into account this all-time high and then this massive pullback, we're still kind of in this uptrend. We should stay in this uptrend until we hit this 4,200, and then that should break that uptrend. But we're still making higher highs and higher lows in the long term. This is in the long term. This is looking at 2 to 3 years. So don't do anything saying this is on an uptrend. It's not unless you zoom out as far as you can. So let's take a look at a stock that I sold some spreads on last week. Amazon. This is Amazon as far back as we can go, but let's take a look at it here. Okay, so we're looking at this 123, 124 level. It's down from about 145. So this is concerning right here. Let's see what my trades look like on Amazon. I have the 80 put that I bought and the 110 put that I sold. So I'm on the hook for about 3,000 right there. Let's take a look. So this 110 and this 80 is way down here. So as long as it closes above or above this 110 and above this 80 in here, I'm gonna make some profit. So let's take a look on this up day. Anytime you're on an up day and you have puts out there, you want to look at those puts and see if you can better your position. So let me put this in. I sold the December put for 110 and I bought the December put for 80. So let's take a look at this. Keep in mind, I already collected the premium, and I think I collected over 200 on this premium. So as it stands right now, I collected this premium already. It's already in my pocket. My max loss is 2,800 on this. Okay, that hasn't changed. What changed was this amount right here that's in my pocket. Since it went further away from the puts, then this number is going to be smaller. Okay, and I showed you that last week on how spreads move. So let's take a look and see what I can do here. So let's go to 115. Let's sell the 115. And it says keep in mind this was 176. So let's go 176. So let's see if we could get more premium and reduce our levels here. So let's go 115 and let's buy the 90. Buy the 90. So see how it said 176? I collect more premium here. About, what's that, $85? More premium there. And see how this was almost 3,000? Now it's 2,200. So I collect additional premium, 176 to 250. And I lower my max loss. And the reason I can do that is because I'm getting closer to the current strike, which is at 129. So I went up to 115 here. From this 110, I went up to 115 here. Then I went from 80 to this 90. You see the 90 is still right here. This is still a low point. The chances that it breaks through this 90 is very low. Okay? And then the chances that it breaks through the 115 is a little better than 110, but not much. So I take all of this right here out of the risk, and then just add this little tiny bit risk here. Let's go all the way back and look at these levels. Yeah, all the way back doesn't work because it was trading at 200 back in the day. So that's why I looked at the 4 hour. Let's look at the day and see. So the day is a little better. Here's the 115 right here. And you see this, the 115 was significant back here. And then the 90 still significant here. This 80 is what I was working off of. But that was so long ago that we may not even hit that level again after this nice run. We need something catastrophic. So putting in these trades, what does this look like? This looks like I'm going to do the sell first, or I'm going to do the buy first. So let's say create a rolling order. I wanted to go to 90. So I'm selling the 80 and I'm buying the 90. So I'm getting, this is going to cost more. It's going to cost $21. Let's make that a round number, 20. It's going to cost $20 and I'm taking I'm taking $1,000 out of the equation in terms of risk. So let's do that. Make sure it's right. Yep, 2130. Let's go. Boom. Now, what do I do on the other side? What do I do on the other side? Well, let's take a look. Monitor it again. Let's go from 110. We're going to 115. Create rolling order. We're selling the 115. And we're buying back the 110. And this is for December. So I'm going to pocket $94. Well, let's make it 95. I'm going to pocket $95 minus the $20. I'm pocketing $75 and reducing my risk. So let's go ahead and sell that one. And that is how you trade when the stock is moving away from you. That's what you want to do, is you want to lower risk and possibly collect some premium. Now, how much time do I have left? It's only been 7 minutes. Let's cut it short there, and I'll show you my other idea tomorrow.